All right. Hello and welcome. I'm Sheilla Vidal with FEG Insurance Services. Welcome to our BNI Financial Expo. We are a group of business professionals out of Benicia who help our clients with financial services so they can enjoy peace of mind and build wealth. Today, you will be hearing from each of us and have opportunities to ask questions so you can get 2021 started with some great tips to improve your financial fitness. And simply for joining us today, you get a chance to be entered in a raffle for a special gift from all of us after this. So stick with us all the way to the end. All right, so I want to let everyone know that our real estate agent, Sarah Hatch, had a family emergency today and she regrets not being able to join us. Sarah, we hope all goes well for you and your family. And for those of you who were looking forward to hearing from Sarah, we will have another one of these events again. So there will be lots of opportunities, or you can get in touch with Sarah directly. We will have our information in the chat. So now without further ado, our first presenter today is going to be Ann Talbo, our estate planning attorney. Take it away, Ann.
Thank you, Sheila, and thank you, guests, for joining us today. As Sheila said, my name is Ann Talbo. I am an estate planning and probate attorney. We have offices in Santa Rosa and Benicia, and one of the questions that I get asked most often in estate planning is, do I actually need an estate plan? And if I do need an estate plan, do I need a trust or do I need a will? And most often the response to that is generally, do you own a house or a piece of real estate? Because if you own a piece of real estate, then more than likely you're going to want to have a trust, otherwise known as a revocable trust, a living trust, an inter vivos trust, or a family trust, rather than a will. And so one of the reasons why is because probate avoidance, meaning avoiding the court supervised process of having the courts be in charge of administering your estate after you pass away. Avoiding that process is one of the key goals of estate planning. And if you have a will by itself, it does not accomplish that goal. A will does not have any legal effect until the person who creates the will, otherwise known as the testator, has passed away. And because probate is the court-supervised process of determining the will's validity and authenticity, the appointment of the executor nominated in the will to administer the probate estate, that has to happen first. No one can touch the asset. And if your asset is a piece of real estate, the question is going to be, who's in charge of that asset if there is no trust in place, or if all you have is a will, then the court actually has to authorize someone to be in charge of that real estate. Meaning you can't even, if you use it as rental property, you can't collect the rents on that property. And you wouldn't even really be able to communicate with, let's say, if you wanted to sell that piece of real estate, you wouldn't have the authority to sell it unless the court issued what we call letters testamentary or letters of administration that allows you to sell that property on behalf of the estate. Before you can sell that, you would also need an inventory or appraisal, inventory and appraisal, in which a probate referee appraises that property for you as of the date of death. So sometimes somebody passes away and no estate administration is done for several years. And then eventually the son, the daughter, or the spouse goes, you know what, I really want to downsize, or I want to move to another house. But there was no administration done of the person who passed away. And because the real estate is still in their name, there's no one who has the authority to sell that property. Now, out in the open market, you could say, okay, that property is worth $500,000, $400,000, $800,000. But a probate referee actually has to go to the property, visit it, look at the comps and provide their own appraisal for that property. And until you get that appraisal back from the probate referee, you aren't able to sell the property. And sometimes if the inside of the property is trashed and the referee has only taken a look at the outside and provides an inflated appraisal because they're not taking into account the need to repair the property in certain ways, you might have to go back and ask for a reappraisal of the property. So it holds the process up. That's just to sell the piece of real property. Now, depending on how the court structures your authority to administer the estate, because the court can give you limited authority in which selling the real property, you need to ask the court for permission to even enter into a sales contract on an exclusive basis with a real estate agent, or full authority, which means that you can go ahead and sell the property without court supervision. If you have limited authority, then it gets even longer. The process gets even longer because then the court will actually have to confirm and supervise the sale of the property. Meaning that even if you enter into a contract with someone and someone makes a really good offer on the property, the court has to hold a hearing in which someone can outbid your offer for the sale of the property. And I have to say, having experienced that type of sale recently on Zoom, it gets very hectic because generally the court will look at the attorney and then the other bidders for the property and say, okay, do you have your 10% fee certified check for the piece of real property? How do you do that by Zoom? How do you confirm certified checks by Zoom? So those are some of the issues that come up when there is no estate plan in place or when everything is supervised by the court, because the court sometimes has to make the procedure on the fly. And if that's for real property, sometimes when the court also has to order other things such as final distribution, meaning no money can actually go out to the beneficiaries of the estate until the court reviews the accounting and then says, okay, this estate is in a position to be closed. All the debts have been paid. We can go ahead and issue, or the person representative can go ahead and issue all of these funds to the various beneficiaries. That's what happens when you have just a will or no estate plan in place, and there's real estate that hasn't passed by joint tenancy or right of survivorship. Now with a trust, what happens is that your successor trustee, if your trust includes that piece of real estate in it, then all it takes to manage that property is for your successor trustee to be able to take over, and upon your death will issue in you what we call certificate of trust, in which your successor trustee is named, and it says specifically in there, my trustee has the power to sell this piece of real estate without court supervision, or mortgage it, or lease it, or enter into contract regarding it. So with a trust, you have a lot more flexibility and power, and also you're able to do certain things with that real estate that will allow you to structure it so that your beneficiaries can receive the full benefit of it, which might not happen if it was a court supervised process. So those are just some of the reasons why. It's a very brief primer on why trust is probably preferable if you own real estate to put that property in trust rather than have it in a will. And by the way, with a will, it's going to take about 12 to 18 months on a good, clean, simple probate administration before your beneficiaries will see any funds coming their way by way of distribution. Whereas in a trust, depending on how fast it goes and how easy the trust administration can be, your beneficiaries can start receiving funds or be distributed their assets within a year or 6 months, depending on the situation, right? So if anyone wants to talk to me about estate planning, my name is Ann Talbo. I am with Brockway Law. And thank you for listening to this presentation.
Thank you, Julianne. That's really important really good information. Thank you for sharing. It's really important to think about putting your home and all your other assets, right, Julianne, in your estate plan. And if you haven't done it, make sure you put that in your to-do list. Does anybody have any questions for Julianne about this? Yes, Will.
Yeah, no, I was just curious. Do like land corporations, LLCs, that sort of thing, should they do a trust, or is that something totally separate and different?
So it's a great question, Will. So an LLC is a limited liability company, is a corporate entity. And so you can transfer your membership of an LLC into a trust should you wish to, and then what would be transferred over within your estate plan is your membership interest in that LLC. So the real property would be owned by the LLC. And it's the ownership interest within that LLC that is transferred generation by generation. But that's also really complex and complicated. And it's one of those things in which your estate planning attorney would have to work really closely with your real property attorney to make sure that that all of the I's are dotted and the T's are crossed in such a transaction.
Thank you.
All right, so if you have any further questions for Julianne, be sure to reach out to her. I have posted our contact information in the chat. All right, so next up is Marshua Burns with our mobile notary, Burns Notary. Take it away, Marshua.
Thank you, Sheila. Great presentation, Julianne. Definitely lets me see how, as a notary, Marshua Burns Notary, how I process documents on your behalf, as well as others. The most important thing in regards to being a notary is that notarizing documents, we definitely have to make sure that the clients have a valid ID that supports the documents, name, address, so on and so forth. Without that, without it being valid, they definitely have to make sure that they have credible witnesses that could speak on their behalf. So I do, when setting up an appointment or trying to get these documents notarized, the important part is to set up that if you don't have the proper ID, to make sure that you have two credible witnesses that can vouch on your behalf that also have to have valid IDs. And then once we process that information, because of COVID, we're still face to face with the clients. And so I have to make sure that I wear gloves, I wear masks, I have sanitizer spray with me at all time, and sometimes booties for the shoes, because sometimes you walk into clients' houses that don't really want you to have footwear. And I come prepared in that area. The important part is just that the clients understand what they are signing. For the most part, you as agents or supporters to these documents are the ones to explain. We just provide them with notarization of the documents. The thing is that sometimes the documents do not come with the notarized piece on my part. So I'm in that place where I definitely have to say, hey, are you going to acknowledge this document, or are you going to swear and affirm, which allows us to still process the documents, even if those documents aren't supplied with the package. The other part with that, not only do I do the whole estate planning part in this area, but I also do loan signing documents and any documents that need to be notarized, or even witnessed, because I don't necessarily have to notarize the document. I can be a witness to the document as well. We don't get to notarize our own signature. So that pretty much kind of works hand in hand. The other thing is to be able to have that support. I happen to do American Sign Language. And so opening that door for the hearing impaired, deaf, to be able to also participate in protecting their homes and businesses and anything else that they need to get notarized on their behalf. You know, most of the time they'll get a notary who just point here. There's no explanation. So then you have someone who has ASL language that now there's no barrier. So now they can ask the questions, you know, but if it's questions that go beyond my capabilities, then of course we just call each other and say, hey, I need your support, Julianne. You know, what do you think? You know, maybe we can do a Zoom call so they can see you and interact as well. So those are things that help benefit getting these packages processed and through. I do travel through all 9 counties. I'm a mobile notary, and sometimes I print the documents out for you and provide them to the client. Sometimes the clients already have the copy. So for the most part, just doing the support on notarization only. Sometimes I can explain it, the documents, and sometimes not. And that's when I reach out to you all for the support for your client and close out the file, whether I'm taking it and shipping it or whether I'm bringing it to your office. Either way, as a notary, that's what I do. Burns Notary. Thank you.
Thank you, Marcia. I really love the fact that you really care about, you know, our deaf clients, giving them that extra attention so that they can understand what, you know, what these documents are all about. And so if anybody here knows somebody who needs a mobile notary, as well as somebody who is deaf, please reach out to Marcia. Does anybody have any questions? You could unmute yourselves and ask Marcia a question, please.
I did a good job explaining.
You sure did. You sure did.
Thank you.
All right. Well, we're going to move on to our next presenter, Stephanie Scanlon, our State Farm agent. Go ahead, Stephanie.
Thank you, Sheila. Hi, everyone. I am Stephanie Scanlon with State Farm Insurance, and my office, my physical location is in Benicia. And I wanted to talk about umbrella insurance today because a lot of people ask the question. Everyone has heard of it, but some people don't really know what it means. So I wanted to explain a little bit about that today. But it's really a way that you can protect the life that you have worked so hard to build, and you can worry less and you can enjoy more. And it can take someone years of hard work to reach the point where you feel comfortable about your financial future, but it takes only a second, a sudden moment. It could be someone slipping on your property. It could be a car slamming on its brakes in front of you to put all of that future at risk. And in cases involving serious injuries or property damage, juries across the country are awarding judgments in thousands or even millions of dollars. And it is a really high sue rate in California, but it doesn't have to be that way. Whether you've established your financial future or you're still working towards it, an umbrella policy with State Farm is really one of the best ways that you can protect that. And you might ask yourself, how? Your underlying policies like your auto insurance and your home insurance, or maybe even a boat owner policy, will provide hopefully substantial liability limits, but you may need more protection. And at State Farm, we're here to help life go right. I know you've heard the commercials, but that really means helping you plan for the unexpected with insurance options like an umbrella policy. So it's coverage that may
So Stephanie, we're not hearing you right now. Okay, so it looks like we lost our connection with Stephanie. Okay, let's see here. Okay. Yeah, she's coming back. Here she is. Hey, Stephanie.
I'm back. Of course that would happen while I'm talking. Of course it would. Well, I hope you guys are catching some of it, but
Yes.
really, I mean, an umbrella policy is a great way to protect your assets. And that's really what you're doing with any insurance policy is you're transferring your risk over to State Farm or over to the insurance company that you have. So it's really about how much do you want to be responsible for on your end and how much do you want the insurance to cover? So it's called an umbrella policy because it kind of acts as a little umbrella around everything that you own, your cars, you as drivers, any homes that you own, any rental policies, boats, even land. Like Will, you were asking the question about land elsewhere. So if someone's hurt on that land, your umbrella policy is going to extend and give you some protection there too. But you want to take a hard look at the limits that you have for your home and for your auto insurance. Hopefully you have limits on the higher end and you're not the state minimum because you do have to have some required underlying limits to be eligible for an umbrella policy. And that is $250,000 in liability coverage for the other person, $500,000 for the total accident, and then $100,000 in property damage that actually fixes the other person's car or building or whatever it is. But you still could have some exposure out there. Working in insurance every day, I might kind of sound like a pessimist, but it's because I see it all the time. So even if you had $250,000 in coverage and there was a bad accident where someone was injured to the point where they can't return to work anymore, or it's a worst case scenario, someone dies in that accident, there's a very, very good possibility that that family is going to want more than $250,000 from you. So they're probably going to ask you for it. You're probably going to get hit with a lawsuit, but having an umbrella policy is going to give you more peace of mind, knowing that there's more liability coverage in place so that if that happens to you, that they can get into State Farm pockets before they actually will come after you personally. So in a nutshell, that's really what an umbrella policy does for you. And the coverage amount should be in line with the assets that you have, including retirement, 401ks, all that kind of stuff. So, you know, it's an easy, very affordable policy to get in increments of $1 million. And at State Farm and at my office, we're here as your life evolves, working with you to find insurance options that address your changing needs and financial needs. Could be starting a family, buying a home, planning for retirement. But we can talk about how an umbrella policy can help protect the life that you have worked so hard to build. Because no matter where you're at in your life, nobody wants to start over. So get in touch with me. You can call me, you can email me, or you can visit my website at mybeniciaagent.com. Thanks.
That was awesome, Stephanie. I agree with you. You know, you could spend your entire life building your wealth and it could be gone in a second. So yeah, it's really important to think about having insurance and make sure that all your insurance needs are covered. Would like to open the floor for questions. Anybody have questions? Phil, Ron, Ellen, or anybody else in here for Stephanie? Will.
Yes, Stephanie, two questions. One is what's the correlation between the amount of the umbrella policy relative to your assets, retirement, that kind of stuff? You know, what's the tie in there? And from your experience, you know, with worst case scenarios, you know, what kind of limits are, you know, appropriate for nowadays in terms of 1 or 2 million or whatever? Whatever's, you know, whatever you can share on that would be appreciated.
Yeah. So as far as the correlation,
You're muted, Stephanie.
I'm having so many problems. So as far as the correlation, what you're really trying to do is transfer the risk over to State Farm. So if you have $7 million in assets, you should have a $7 million umbrella. Because what's going to happen is if you do get sued, let's say you kill someone in an accident, the insurance policy, no matter what your limit is going to pay out to that policy limit, and then you're responsible for the rest. So if you go to court, the judge is going to ask for a list of your assets, your money in the bank, all your home, your car, your retirement, and all of that is at risk. So whatever that totals up to should really be what you have coverage for, or the amount of your umbrella policy. And as far as your second question, I will give you guys a quick story. So when I first started insurance, I had this family. It was a very easy, simple accident that can happen. And they had a dog and a small child. The child left the gate open. The dog got out and got into the neighbor's yard and bit the neighbor. And he just bit his finger off. And you're thinking, oh my God, this is terrible. Well, it ended up being really terrible for that family. The initial bill was like $300,000. And they keep piling up on top of that. Like, it's not just a surgery one time and it's over. Like, there was bills for the long run. So luckily that family had their homeowner's insurance coverage at $100,000. So it comes off of the base policy first, and their umbrella policy kicked in and picked up the other $230,000. So that happened to me when I was new into insurance about 10 years ago, and it instantly made me a believer of umbrella policies, because you just never know. And they really had no control over that. It was an accident, and that they're all accidents, right? So it's just peace of mind.
Thank you. Thank you. That was very well explained, Stephanie. Well done. Welcome to our visitor, Dawn. Thank you for joining us. All right, Dawn, can you hear us okay?
Yes, sorry, I missed the beginning.
That's okay. There will be other opportunities where you can attend and join us again next time. I did post our contact in the chat for your benefit so that you can reach out if you have any questions to any of our panelists and be able to get answers to any questions you may have.
Okay, thank you.
Ellen, you have a question.
Well, you're recording this meeting, so maybe Dawn can access it later so she can pick up what she missed.
Yes, that's correct. Yes, I'm also recording it, and we will be posting it on our social media. We are on BNI Referral Zone. And also we have a drawing at the end of this event. So if you make it to the end, you will be put in a drawing. All right, so our next presenter is Wil Thigpen. Wil, what's new with health insurance for 2021?
Well, thank you, Sheila. Let me share my screen here. It is still the open enrollment period. This one. Here we go. Well, as many of you know, and some of you don't, I'm a certified insurance agent, and here's my contact information. I'm appointed with most carriers, and I'm also associated and work with Covered California. So what I wanted to share with you today is just some of the changes and some of the things that are going on for 2021. A couple of years ago, back in 2019, Covered California passed a series of laws relative to health insurance, one of which was they created an individual mandate. And that basically says that if you don't have health insurance in the state of California, you'll be penalized. You'll pay the original penalty that was set up by the federal government, which they reduced to $0. Now the state of California through the Franchise Tax Board enacts that, and that's $697 per adult, half that amount per child, or 2.5% of your income, whichever is greater. So as you can imagine, that can add up pretty quickly. So one of the things relative to COVID is the current administration, the Biden-Harris administration, decided that they wanted to extend the open enrollment period. And basically during the open enrollment period, you can get coverage. If and when the open enrollment period closes, you're going to need a qualifying life event in order to be able to do that. So you get married or divorced or have a child or you move to another area. Those are examples of qualifying life events. But if you don't have one of those, you have to wait until the open enrollment period to enroll. And so, as I said, the Biden-Harris administration has extended that for 3 more months, and that's going to run to May 15th. So the opportunity to get health insurance is still available right now. So a couple of things relative to health insurance for 2021 I want to talk about. I don't know if I'm at the beginning or the end of my presentation, which I am. So let me try and start this over again.
Incoming transmission.
And turn off my phone. So one of the things that is available during the open enrollment period are these different carriers. You can either go through Covered California or go directly to a carrier that's offering health insurance. The advantage of going through Covered California is that one of the other laws that the state of California passed was they increased the ability to be able to receive premium assistance. And what that is monies that are applied immediately to your premium for your health insurance to try and make it a little bit more affordable. So in the past, if you made 400% or less of the poverty level, and it depends on your family size and your income as to whether you qualify into the 400% of poverty level, the state of California increased that to 600% of the poverty level. So for example, for an individual who's making $75,000 or less, then you'd qualify for premium assistance. Now, how has that affected, or how are pricing going for this year? And that's one of the things that I wanted to kind of point out here in the individual and family market. Covered California did an analysis, and statewide, generally speaking, prices have gone up about 0.6% overall. Depending on the coverage that you have now, if you decided you wanted to step down to a lower plan, you potentially could save as much as 7.3%. But again, that's going to vary from area to area and carrier that you choose. So for example, here in our area, Area 2, which is Sonoma, Marin, Napa, and Solano counties, 2 of the bigger providers, Kaiser and Blue Shield, have started to try and compete with one another. So for example, Kaiser has taken a price increase of about 2.2%. So if you've been with Kaiser, you're going to see that go up a little bit. But if you were with Blue Shield, they went down about 0.75%, I believe it was, but they went down some. I'm not exactly sure about that number. So they're getting a little bit closer, but their premiums have been so far apart, it's going to take a little while before they get back. But these carriers are available. Those price changes have taken effect for 2021, and it's something that you can look forward to. One of the other big changes for 2021 is in the actual creation or the format of the plans that are available. I know this is a really busy chart, so I'm going to cut through it really quickly. Essentially, there are 4 different levels of medallions: bronze, silver, gold, and platinum. And the difference between those is that if something catastrophic happens to you and you have a bronze level plan, your carrier is going to cover about 60% of the cost. Silver is 70% of the cost. Gold is 80% of the cost. And if you've got a platinum plan, your carrier is going to cover about 90% of the cost, and your out-of-pocket expenses will be about 10%. So the way they've structured this here is that you've got co-pays and wellness exams that you have to pay for these different procedures here along the left. And then you have deductibles and you have maximum out-of-pockets. Maximum out-of-pockets is the most amount of money that you'll spend in any one year. So the big changes have occurred in the bronze, silver, and gold plans, and that's been in the maximum out-of-pocket. Last year, the maximum out-of-pocket for an individual was $7,800. This year, it's gone up to $8,200. And your maximum out-of-pocket for a family, you collectively, was $15,600, and it's gone up to $16,400. And that applies across the board for bronze, silver, and gold plans. The other changes for the plan structure was copays for gold. So if you go to a doctor or an urgent care, last year you paid $30. This year you're going to pay $35. And then for imaging like PET scans or things like that, that was $275 under a gold plan last year. That's dropped down to $150. One of the other changes that has happened as a result of the individual mandate is that this year you'll be getting a new form. Last year and before that, you were getting a form called a 1095A. That basically showed whether you had coverage or not, who it was with, how much it cost, how much you paid, a whole volume of information. Now this year, you'll get the Franchise Tax Board's version of it, and that's a 3895. And that's going to be pretty much a lot like the 1095A, but you'll use that in completing your state tax return. And that's where you're going to find out whether you received enough premium assistance or not. If you did, then everything will be okay. If you got too much, then the Franchise Tax Board or the IRS are going to give you a tax bill. But if you got too little, both of those entities will then send you a tax refund or give you a rebate. So anyway, I know that's a lot of information, but I wanted to share with you some of the changes for 2021. There's my contact information. If you have any additional questions that you don't get to ask today, feel free to give me a call or reach out to me. My website's in the process of changing. So when I get that information, let me know. Just when I get that information, you let me know your contact and I'll pass it on to you. Thank you.
Well done. Thank you, Wil. All right, so I'm going to ask you all to unmute yourselves and ask any questions you have for Wil. We still have a little time.
Okay, good.
Well done, Wil.
Okay, well, thank you for always informing us, Wil, with what's happening, what's new in the health insurance field. All right, so now I'm going to share my screen. Okay, here we go. Okay, so I'm not sure. There we go. Okay, so I'm Sheilla Vidal with FEG Insurance Services. I'm a life insurance broker. A little bit about me. Before I became a life insurance broker, I have worked for a good number of years as a physical therapist. And I have noticed that many sick people are unable to live a life of dignity because they lost their income or they lacked financial preparation or financial resources that are available to them. And so being a person who always aimed to do right by the people who matter the most to me, which is my family. To me, family is everything. I wanted to make sure that they live a life of dignity in the event that I suddenly lost my ability to work due to an illness, a severe illness or injury or disability. So I look for solutions. But before I share that solution, I want to first define what living a life of dignity means to me. To me, that's having your needs met, having everything you need to get better, having more options available for treatment and care, and not just be limited by what your health insurance will will approve or what your finances can afford. Being able to focus on getting better because money is no longer an issue, and not having to raise funds through GoFundMe or any crowdfunding sites, or asking for donations from people that you know. Fun, not a fun fact, but this is a fact. I want to share with you that I just recently did some research and an article about organ transplants and how organ transplant centers are actually doing financial screening beforehand. Before they approve somebody for an organ transplant, they want to make sure that they have tens of thousands of dollars available to them to be able to afford the lifetime medications that they're going to need to take after they get the organ transplant. And these medications are expensive, and they're not fully covered by health insurance. So that is something that they're requiring. And, in reality, who wants to do that when you're sick and you're, trying to get better, you're trying to get an organ transplant? The other thing is living in the comfort of your own home with the people who truly care for you. And I say this because I have seen some people that are fighting a foreclosure, fighting a bankruptcy at the same time that they're fighting cancer. So, that's just so hard. And that's just, very, very tough to go through. And finally, to me, it's just having a quality of life. So thankfully, I found that solution in life insurance with living benefits, which can be there if you get sick, if you live too long, and even if you die too soon. And so I decided to help other families, not just my own family. And so I love working with multi-generational families, from the youngest member of the family to the oldest member in the household, as well as family-owned businesses. So this is where I'm really passionate about. And I help them with their life insurance needs. I can do policy reviews if they already have a policy. These policies can help with burial costs, long-term care, long-term illness expenses. It can also help with legacy planning and tax diversification. And for businesses, we can help with business succession plans or exit strategies. We also have guaranteed approval life insurance for those who are worried that they have had some medical condition in the past and they have given up and they thought they're never going to get approved for life insurance. Well, we have something for you as well. So on to the insurance tips that I was going to give to you today. First thing I want to say is choose benefits over price. Okay, so first of all, there's one big misinformation. A lot of people think that life insurance is expensive. But if you really compare it to a lot of the things that we spend money on, it's really not. For example, a cup of coffee costs $4 or $5 a day. For, a 30, 40-year-old, that's, trying to get life insurance, we're looking at pennies a day or, 20 cents a day. So, look at, you may be paying the least amount of premium for life insurance, but ask yourself this: are you really getting enough coverage for your family if something happened to you? Is that going to be enough to help your family or to help you if you got sick and can't work? The other thing I want to say is also look at, are you only getting that benefit in that premium that you're paying, or are you also getting additional benefits like living benefits that will help you while you're alive for the same amount of cost? All right, so next is prepare for your medical exam. And this is something that I do with all my clients. I make sure I tell them to prepare themselves because usually they would have to fast for 10 to 12 hours before the exam. And about 50% of insurance applications do require a medical exam. So I tell them to make sure they get plenty of rest, plenty of hydration, avoid coffee or tea or alcohol before the exam, but just drink water. Water is really, really good. So So yeah, so the result of your exam can really impact your premium. So, I'd like you to get the best results. So doing those little things can make a big difference, can really help. So that you can pay, the least amount of premiums that's possible for your situation. Next is go beyond your employer plan. So if you have an employer who offers life insurance for free, definitely sign up for that, take advantage of that. But again, look at how much coverage is being offered at no cost to you, because that might not be enough, again, for your family or for your needs. So you may want to spend that extra dollars in order to get extended coverage, or you may even want to think about getting a plan outside of your employer plan, because, if you get terminated or get laid off, then, you're not going to have that coverage. Yes, you will have some options available to you, but it's going to be limited to that employer plan. And if you already have some kind of medical condition, it will, at that point, it will be harder for you to get life insurance coverage outside of your employer plan. So the best time to get life insurance is really while you're well, while you're healthy. All right, make sure you review and update your policy with your agent. And this is, really good to do if there's any life changes, such as getting married, or the flip side is getting divorced, having a new baby, buying a new home, if you're empty nesting, or if there's a death in the family. You want to make sure you review and update your beneficiary. And if your agent is not being proactive about reaching out to you to review your policy on a regular basis, then it might be time to change your agent. All right, so the next one is get an in-force policy illustration. This applies to those with universal life or whole life policies, those that have cash value, because this would clue you in as to how long your policy is going to last. Is it in danger of lapsing within a few years? We've done this with a client where we found out that her policy is only going to last for a few more years, and she's in her late 60s, and she really needed that insurance coverage to last longer than that. So doing this helped us to be able to take the steps necessary early on, so that we can make sure that she will have her insurance policy, her life insurance coverage when she needs it. Another thing that this does is it helps you look at the cash value that you have, especially if you had borrowed any funds from your life insurance policy, to make sure, again, that you take the steps necessary to make it last longer and as long as you want it to last. And finally, view life insurance as part of your overall financial plan. As I mentioned in the previous slide, life insurance is not just there for your family if you pass away. It can also help you if you get sick, seriously sick, such as a cancer, heart attack, stroke, and many other conditions. It can also help with your tax diversification and your financial plan, and provide a legacy for the people in your life. So there's so many different uses for life insurance. And then again, for business owners, it can help with retaining employees, as well as making sure that there's an exit plan if you, as a business owner, want to retire or want to give up your rights in the business. So I'm here to help you do right by the people who matter to you. This is my contact information. Happy to answer any questions. Hi, Ellen. Yes.
You are so thorough, Sheila. Gosh, it just always leaves me with no questions.
Thank you, Ellen. I appreciate that. Well, does anybody else have any questions? Just want to also type the Facebook page where you can find us. It's called BNI, the Referral Zone. I'll put it in the chat. And so now on to our drawing for our prize. Okay, so thank you so much for joining us today.
What about Ellen? Ellen?
Yes, yeah.
What?
Ellen,
Are
you
you
have
gonna do
a
it?
question?
No,
I thought Ellen was going to talk.
I didn't have a question. I just wanted to let her know that she was so thorough. I don't have any questions.
Oh,
Okay, well, here we go. I'm going to go ahead and pick our lucky winner of our prize. So let's see here. Glad you could join us today, guests. Oh my goodness, it's Ronald. Ronald, you won. Hope you heard me. Congratulations, Ron. I'll get in touch with you. And Dawn? Sorry.
Yes.
Hi, Dawn. Glad you can join us. I am familiar with Ron and Phil. Just curious, who invited you? Or how did you hear about our event today?
I found it on Eventbrite.
Awesome, awesome. Can you tell us a little bit about what interested you in this event?
The real estate and the trust part, which is, I know, the part I missed.
Oh, okay. All right. Well, we will be posting the recording very, very soon. You know, so you can, and then if you would like, you can also reach out to our estate planning attorney, Julianne here. Do you see our information on the chat?
Yes.
Awesome. Yes. All right. Well, you know, we've come to the top of the hour. Thank you so much for joining us. Reach out to us. We'll have other events in the future. Thank you. Thank you for joining us. Enjoy your afternoon.